Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Monday, May the 20th, 2013. Across the U.S. markets, we saw a shooting star develop today, or the equivalent thereof. These are sell signals, things that tell us that we should be looking for a top in here. And so looking at the longer-term Dow Jones Industrial Average chart, I'll look at the short-term in a moment, but looking at the longer-term, you can see what other people are seeing, and I consider it to be too obvious, but it's important that you know you had a high point here, bounced off of it, good low point, higher high between these 2 points here, lower low between these 2 points here, and then come up here and we're hitting a higher high now. And what we're looking at the same trend line here as being resistance. I think and a lot of times whenever you see these setups like this, a widening top pattern, a lot of times you will not hit the upper trend line on the final run because it becomes so obvious and it sells off short of that. This could happen here, or we can come up and hit it and bounce off it. In either case, there's something here that to be noted, and that is that in this scenario here, you had the rally prior to the subprime bust of housing market, and then this is of course supported at the time by the Fed. The Fed was motivating this, driving or the government I should say was motivating that. And then in this particular case here, for this entire run here, we have again the Fed stimulating the markets to drive it higher, but then come summer they expect to stop that. Well, that means all of this that's just been supported by the Fed comes to an end. If we add in the fact that we know that revenue has been missing, the top line has been missing on all these companies reporting, then we know that they cannot sustain those substantially inflated earnings figures. So we're going to start seeing companies start reporting misses on their earnings front. And so that again is going to be adding a headwind there, and that's fundamental and technical reasons to look for a sell-off coming this summer. Quick glance here now, looking at the Dow Jones Industrial Average short-term chart. You can see you got the shooting star signal here, and again, this is not a sign that you should start selling immediately. It just simply means watch it. If you get confirmation lower low the following day, you could take a shot at that on the sell side with a tight stop right off the high here, 1 cent above that. So this would be your risk right here, and the gain will be much larger. So that's a nice little trade opportunity there. The main thing to note here is that whenever you get up here in the ultimate oscillator, you find a lot of your oscillators will do this. Whenever you peg out up here on the overbought condition, and then you just sustain that, you don't fall back below that 70 line, this little thin black line right here. Whenever you don't fall below that, you're just showing that upward momentum is very strong and stays that way. The sell signal people will use is when you close back below that line, and right, which you've just done today. So that'll be important to note. You've seen back here when you fall below it, that starts to peak out again and again. So keep an eye on this. We're seeing that happen today. You can jump back above there. I've seen it happen before, but then keep an eye on it. This is one of those sell signal here that we watch for. The NASDAQ, of course, gives us the same conditions, and you'll notice again when we start off with the sell signal, we had the shooting star right after we had one over here. Gap here as well, so we have one gap here, another gap over here. That's a total of, let's see, 3, 4, 5, 6 gaps to the upside here. We've never come down and tested this bottom here. We have a massive pullback that's overdue. So this is something that we should definitely be watching here on the sell side. Also, same conditions on the ultimate oscillator. You dip below the 70 line, jump back up above it, failed to reach the previous high. That forms a bearish divergence. We got the right tools here. You can see this high point here, lower high here, trending down on momentum. The low point here also lower than the low point you'd seen before, so you can see that momentum to the downside is increasing, while momentum to the upside is, momentum to the downside is increasing, momentum to the upside is decreasing, yet price activity just continues to move straight up. Unsustainable condition. Like I said, you haven't tested this point down here, lots of gaps to fill. This is going to pull back, and it's going to pull back hard. The Russell 2000 Small Cap Index, the same basic overall conditions, not as pronounced on the shooting star signal, but again, if all other U.S. markets pull back, there's no way the Russell can stand alone. So it's important to take the note, and that's why I marked it. Again, you would look for confirmation before you start selling. But the main thing here, again, dipping below the ultimate oscillator at 70 line at 67.9, showing it starting to get more momentum to the downside is increasing here. Again, with the failed high point here, lower high here, you can see momentum failing there as well. This means this is unsustainable. It should also be noted that the small caps, I've talked about this before, small caps get hit harder by a lot of the government stuff that they're doing right now with raising taxes on businesses and so forth and so on. These guys are going to get hit really hard when consumers are, these guys are not global. They don't have a lot already set up that the mid and large cap companies already have. So this is a good short opportunity. Again, a massive gap below here, here, and here, and we also have some here. So I can go on for a while on this one, but this again is another situation that we're going to see a massive pullback in. The S&P 500 large cap index, also the SPX, you can see here on this particular chart, low point here, same condition, and then again the same signal here. It should be noted that on Tuesdays for the past, I don't know how many, more than a dozen weeks in a row, we've seen a rally on Tuesday. So it's possible that you could simply shake this off like you've shaken off previous and continue to press higher. That'd be fine with me as well. You continue to overextend. You don't solve the problem. You just make it worse from the technical perspective. So continue to watch this for opportunities for a big move to the downside. Looking also now at the Wilshire 4500 or the EMW, the same basic overall conditions. If you're interested in trading the Russell, this one tracks it fairly well, so it's important to note the same conditions again. A shooting star signal, lower low than you'd seen in the previous low point here, lower high as well, indicating the upward move here is growing weaker while the downward pressure is increasing. So that's important to note. Again, massive pullback expected here. The VIX, which runs the inverse of the S&P 500, should be showing a bullish condition if you're looking at bearish conditions on the S&P 500. So that's what we're seeing here. Again, noting the main oscillator here, you can see we've broken above that 30 line there, showing, again, whenever you do that, you're showing strength to the upside, momentum to the upside there. And again, with the setup, like you're having a hammer candlestick formation stuff low, that makes sense. Also, if you were to press lower here, this right here, you got this low point, you can see, the low close I should say, you could see that if anything you pull back here, you're not getting any kind of signal here on the ultimate oscillator that you're going to take out this low point here, and that's going to give you any kind of sell-off. It just forms a bullish divergence, which tells you it's not a sustainable sell-off and it's going to bounce in the other direction and start to move higher. We also have gaps above us to fill and things like that. So again, I'm bullish on the VIX or an ETF that tracks the VIX, but I'm bearish on the U.S. markets. If you've not been to the free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. Also, if you're looking for my short-term or long-term charts on the markets, you can go here into the market section, and then down here you see the market charts. Those are my personal charts. They're updated every single night, both long-term and short-term, with my annotations to show whether I'm bullish, bearish, whatever chart patterns I see, as well as any entry opportunities that I might see. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.